Now I would like to welcome Impero and CFO Morten Lehmann Nielsen. So Morten, the floor is yours the next 20 minutes.
Thank you very much. Good afternoon, everyone. My name is Morten Lehmann Nielsen, and I'm the CFO of Impero. I have the pleasure to give you a short introduction to Impero and what we do. So Impero helps companies become more compliant in a scalable, digital, intuitive, and easy way. Impero provides a cloud-based compliance management platform that's distributed as software as a service, and it enables companies to easily manage compliance through automation of risk and control management, documentation, and reporting. With risk management, customers can map, assess, and monitor all types of risks, from tax, finance, to ESG, and organize mitigating actions and controls in a unified risk framework across the entire organization. Control management allows customers to set up and manage all controls required to address the identified risks. Customers can assign responsibilities, set up KPIs, documentation, and due dates to ensure all controls are carried out correctly and on time. With documentation, customers can document all compliance workflows and document that all compliance processes are carried out correctly. Past and current documentations can be tracked and archived in a fully secure platform. Through reporting, all compliance processes is bundled in a platform where customers always can access accurate, reliable, and real-time data to execute reporting across the organization. Impero's ambition is to become a significant player within the compliance management software industry, and is supported by a strong focus on product development, a scalable platform, proven go-to-market strategy, and a strong international track record. Talking a little bit about the customers, we are showing some of our brands here, and the customer base comprises of more than 160 customers, including blue chip customers like Volkswagen Group, Siemens, Trumpf, Hempel, Maersk, Evonik, and many more. In fact, Impero serves 1/3 of all OMX C25 companies in Denmark and almost 20% of the companies in the German DAX 40 index. The customer base also includes small and mid-sized companies, but with the common denominator that the companies have a complex organizational structure or are operating in regulated industries. If we look at our cohort here, we see that Impero over the 10 years, we turned 10 years last fall, but we have delivered strong double-digit growth throughout this period, and with a nice cohort showing that we actually also managed to get more from existing customers, and I'll get a little bit back to that. We go to market through different channels. One of our successful channels, and actually where we started, was going to market together with partners. We go to market with Big Four partners like KPMG, Deloitte, PwC. And when we go to market with these partners, it's often servicing some of the enterprise customers. It's often kind of going to market with a complex control or compliance issue that has to be solved, where we are delivering the platform and the partners are delivering the expertise to ensure that the customers get a control framework that can help them to get where they want to be and solve the issues. This channel consists of makes up approximately 42% of our total ARR. We also go to market through our own direct channel, where we have our own sales force and our own inbound marketing to support this channel. This is approximately 60% of our total ARR coming from this channel, and it doesn't mean that the customers just buy our solution off the shelf. It's also often together with a partner, but we have initiated the dialogue with the customers, or they have reached out to us, and either we help them find the right partner to deliver the right solution for the customer, or the customer have an desire to use their own consultants or auditors to help implement some of the, whether it being a tax process or a finance month-end close process. Like I mentioned before, then we have on an ongoing basis been relatively good to grow our existing customers. And with a net revenue retention of 108%, then we have our customers that after 12 months buy 8% more. So a customer that buy for 100 will buy for 108 12 months later. And that's either because they grow the number of users, or that we manage to convince the customers that it makes good sense to move into a different domain, that being coming from tax, maybe going into finance, or that they see opportunities to use Impero within, for instance, the ESG framework. Another way for us growing, which we have multiple examples of, is that we start with a regional part of the organization that could, for instance, be a development we have seen with Group M, where we started in Scandinavia, then we moved on to providing our services to their companies in Europe, then globally, and eventually we have made an agreement with the holding company of Group M, which is called WPP, where we can service all of their media companies or media agencies throughout the globe. So the drivers for supporting Impero's growth, and also why we believe we are in a very interesting space, is because we are in an industry where there is growing complexity. And this growing complexity comes from different sources. It is new regulations. I think you've all heard about the CSRD framework coming up, which is being implemented for large corporations here, or you have to report on it for the financial year 2025. It could also be that the auditors have more requirements to the companies. It's being SOX compliance, for instance, in US or the UK SOX, where there is stricter requirements and where the auditors or the board of the companies have more requirements to what you deliver in the finance organization under the CFO umbrella. And the fact that the demand for what you have to deliver within the CFO umbrella is increasing, that's also supporting the use case of Impero. Because the CFO umbrella or the CFO domain to a high extent becomes the data repository for everything that has to do with not just tax and finance, but also ESG. And that's because with some of the new regulations coming in place, then you have to be audited on your ESG data. And that's very interesting from an Impero standpoint, because we are here to support the CFO and make sure that you have good controls in place so that you can prove that you are and stay compliant. We also see that there is an expanded scope of what is being required from the companies. If we go a few years back, then it was ESG was only something that was a requirement for larger companies. Now it will, over time, also become a requirement for smaller companies to report on the CSRD framework. But it will also come even sooner, because the larger companies, they have a requirement to some of the sub-suppliers also to provide the data that they have to report. And therefore, eventually, it's going downstream, and we see that what was a requirement for large enterprises suddenly also becomes relevant for, or becomes a requirement for small and mid-sized companies. I think we all see it, and especially in a country like Germany, we see that the digital agenda is rolling, and where in some markets, like in Germany, where things have been moving a little bit slower, things are really changing now. There is a digital agenda. We are moving away from kind of having our Excel sheets with all our documentations in place to actually coming into a framework where you now need to prove that you have your processes in place and that they can be documented, and also that it's easy to audit. That is not just something because it's required, it's also because that you actually can reduce cost and you can reduce time spent, and is as importantly, you can avoid errors and make sure that there are things that's not being done and that it's not being done on time. Actually, in Impero, our customers experience that sometimes they get our solution because it was required from an external party, being the auditor, or could also be the board, but that as a side effect, as a positive side effect, they actually also realize that the processes becomes much smoother and that they can do it faster and also save money. Based on these drivers, we have in our 2023 annual report, we implemented a new strategic direction called Increasing the Impact. With our current capital foundation in Impero, we have now said that we are able to double our number of customers, or at least double the number of our customers, and become cash flow positive before the end of 2026. We will do that by continue our land and expand strategy, where we have a main focus on enterprise customers, providing tailored solutions together with our partners. We also want to improve our offerings of intelligent compliance management, that we expand our offerings through partnerships that may be being more relevant for the smaller and mid-sized companies, and eventually we are looking into expanding our presence geographically before the end of 2026 by entering new markets in Northwestern Europe. The initiatives to deliver on this strategy and continue our strong growth is that, as I mentioned before, more and more data are moving in under the CFO umbrella, and our focus is that we will continue to be really good at delivering solutions together with our partners within tax, finance, and ESG. An example of something we have implemented recently is a stronger framework to support the SOX compliance, where there are continuously improving or continuously evolving requirements to what you have to deliver and how you have to deliver it and how you have to document it. So, for instance, reviewer tasks, control testing are some of the buzzwords of the solutions that, or where we have improved the Impero solutions to a better extent to support the development we see under SOX. That's also where we continuously, going forward, will focus on having faster releases of innovative features, where we look into making our product more sticky by having the right integrations, like we already have today, where we can integrate with some of the larger ERP systems, where we can integrate with Power BI, but we will continue down that path to make sure that we can serve even more of our customers, to give them a seamless experience working with Impero and making the product more sticky. We also realize that we have a really good interest from partners all across Northwestern Europe to work with us, and sometimes it's also us that have to be ready to embrace that and to make sure we have the focus on working with these partners. That's also part of our strategy, to focus on the partners, not just to grow our geographic expansion, but also to have more offerings together with the partners, so that we not just can offer good and reliable solutions to the large enterprises that we work with, but also that we have cost-efficient and easy solutions for the small and mid-size companies that we're working with. That will mainly be through content enriched solutions or templated solutions, where we are currently offering those, and we have a marketplace where we have some of these offerings ready already, but that's an area that will be evolving and where we will make it easy and more accessible for our customers. Talking briefly about our numbers, then we have in Q1, we are on a rolling 12 months basis, delivering 28% growth with an ARR of 32.4 million. We at the same time seeing that our customers, the average size of our customers has grown nicely. It has grown from 175,000 to 195,000 a year ago. So a good development, and it's both impacted by existing customers growing, but also that the size of the customers that we managed to onboard, the ticket sizes are bigger, and it's also driven by our success in the German market, where we here in Q1 saw that the majority of the new sales delivered in Q1 came from Germany. And we also see that the Danish market, which is of course our home turf as we are a Danish company, is no longer more significant than what we generate from abroad. So now 52% of our revenue is generated, or our recurring revenue is generated abroad, and that's a development we expect will continue as we expand our presence in other places in Northwestern Europe and continue to grow in Germany, where we continue to see a huge opportunity. Net revenue retention of 108%, as I mentioned before, that's an uplift of 14% and a churn of 6%. Related to the churn, then even though we still believe it's at an acceptable level, then it's a bit high to what it has been in the past. The good news is that when we look into the coming periods, then the known churn is lower than what we see or what we saw at the same time last year. And of course, we are doing what we can to ensure it stays that way, so that we also will see a slight reduce in the churn rate we have at the moment. We, in connection with the Q1 report, we reconfirmed our guidance, which is delivering ARR in the range between 38 and 42 million, and an EBITDA in the range of -11 to -9 million. Comparing to the -11 that we delivered in negative EBITDA in 2023. I'll also just very briefly just say a few words about our P&L here. Things are also moving as planned. 28% increase in revenue in the first quarter, continuously strong gross profit margin, costs are under control. Small increase in cost, 7% overall in capacity and staff cost versus the 28% increase in revenue, which of course leads to an improved EBITDA, which is also the intent. That leads me to something that I find very, very interesting, and where we also in Impero have had a strong focus to ensure that we can lower our cash burn and that we have a more balanced approach where we are well in control and we can strike the right balance between our cash burn and investing in growth. That's much easier to do when you have this balance where you, to a higher extent, can decide when does it make sense to put more fuel on the fire, and when is it that you kind of are holding back and stepping on the brake. We are seeing in this, and I think we talk a lot about this burn multiple, where we look at the balance between new ARR generated and cash burn. If we go back to the end of 2022, we burned 3.4 kroner every time we generated 1 kroner in new ARR, whereas we at the end of Q1 were down to burning 1.3 kroner every time we generated 1 kroner in new ARR. And we have also indicated in our report that we are constantly working on improving this balance, and also when saying that we plan to become cash flow positive towards the end of 2026, it will be an ongoing journey to make sure that we eventually get to a point where we also become cash flow positive and that we don't burn money to generate a new ARR. But with the cash position we have at the moment, going out of Q1 with a cash position of almost 19 million, of course, it also makes sense to use the money to continue to invest in growth. And that's what we do. There are a lot of stuff, a lot of opportunities we see of products that we can introduce, of new markets we would like to look further into. And we have a strong organization. We have strengthened our tech organization. We have a well-functioning team, sales team, both in Denmark and Germany now. So it makes a lot of sense to continue to invest in creating growth and keeping this balance. So it's not necessarily a goal in the very short term to turn cash flow positive, even though it is positive, or it is possible, but the ability to continue to having the right balance and stay in control and deliver high growth rates. That takes me to the last slide. I'll do it very quickly because I know that maybe Kasper has some questions. Impero, it's proven, it's affordable, it's easy. We are in an area where the demand is growing. We have exciting customers. We see them expand. They enjoy working with us. They're using our solution more. They are open to new use cases. It's a very good spot to be in. We also see that we both grow with our existing partners, but also the interest from new partners gives a strong incentive to continue to expand our offerings, our geographical presence. So we are in a space with high growth and with a lot of regulatory initiatives and higher demands from stakeholders to prove that you are and stay compliant. That was the words from me. So maybe you have some questions, Kasper.
Yes, thank you, Morten. We have some questions, yes. So first of all, how is your ownership structure? Maybe you can give us some insights into this on an overall level and not into specific detail percentages. Or maybe you have them, Morten, but let's take it on an overall level.
Yeah. On an overall level, I think we can. We also disclose it in our annual report that we have two larger investors, being Profound Partners and Colin AS, having a position between 25 and 33% of the shares in the company. Then we also have an institutional investor called Bank Invest, who is also invested in the company between 5 and 10% of the holdings. And then there's also both management and board that are invested in the companies, but with lower ticket sizes. In general, there are approximately 1,000 investors in Impero.
All right, thank you. Then a question here. I think you went through it also, but can investors follow some trends in your market, to follow your progress? So which things should investors monitor to follow your progress if you have some market drivers?
Yeah. It's a very good question. I think we are fishing in a pond or an ocean that's so big, and we are so small. So for us, there's both an opportunity to actually, as I also talked about, to make sure that we become part of the digital agenda, which is not as advanced in Germany as it is in Denmark. So there's a lot of opportunity for us to get in, work with some of these companies to automate things, make them more efficient. And then you also see that there are all the requirements coming from EU. And here we are also a limiting factor ourselves, because with the team size we have, of course, we have to focus. And that's also why we focus on the areas within tax and finance where we're really, really strong. But our solution would also open up for other, whether it's being more IT related controls or expanded offerings within the ESG space or so. That's where we have growth opportunities. So it's I would say overall it is a space we hear a lot and we see a lot of growth, and it's as much an opportunity for us just to embrace what we already have, grow with the customers that we have, and follow this compliance digital agenda, making the companies more efficient.
And just a final question, very briefly, Morten. What have you succeeded with in Germany that many other Nordic SaaS companies haven't? Maybe you can give your perspective on that.
Yeah, it's a good question. First of all, it's all about people. It's about finding the right people, being able to open the right doors in Germany. We were also a bit lucky that we had a really, really good partner to help us taking the first steps together with one of our founders, who was very focused on succeeding in Germany. And I think the fact that we maybe in the beginning, through a little bit of creativity, managed to land some really, really nice brands, one of them being Volkswagen, and then also having a solution that meets their demand. It's also having the right certificates where, for instance, we can deliver to the automobile industry, which is very big in Germany, and where we have 4 substantial players within that field. So it's a lot of small things, having the right solutions, but also having the courage and having a little bit of luck to access some of these customers through the right partners.
Perfect. I can see we are running out of time, Morten, but thank you very much for your presentation and also answering all these questions. Thank you, Morten.
Very much.